Good morning, everyone, and welcome to the European crossover webinar. And hopefully, we've reached the day where we can start to see markets really start to flow. We did just get German GDP data come in at 0.6. Previous was 1.5%. That's year over year. That just going popped in just now. We also had some earlier figures. Let's go and take a look at that here. French CPI came in at 0.5%, in line, as well as Spanish CPI, which came in down 0.1. Same thing, surprised that that's what they were expecting. We do have UK data, CPI data at the bottom of the hour, as well as, bear with me, PPI. And at the top of this next hour, we do have Eurozone industrial production. Coming into the States, as far as data, we do have at 8:30 Eastern, New York Fed manufacturing, as well as PPI. Let's see here, and that's going to be it. But obviously, the big mover for the day is certainly going to be the phase one deal signing. Personally, I don't think it's that big of a deal in some ways, but obviously the market's been pushing this hard in the sense of the real picture, because one of the things I was looking at is that a lot of the tariffs are still going to go and remain. So when we look at this, shows here that, let's see, but they're going to keep 25% tariff rate on another $250 billion worth of Chinese imports. But that's what everybody's been looking at. Also, a quick recap. I was looking here earlier yesterday, or towards the late yesterday afternoon on Forex Live. It was kind of giving a overall on the phase one trade deal, which it says will be signed at Washington at 11:30 a.m. local time. So it's largely a ceremonial affair, which we do know that. The key thing is going to be the release for the announcement. Well, what they're stating is the actual breakdown of what we're going to see now. It says it's going to be the text of the agreement that's going to be key as to what the details are. Now, what they've gone and noted here, and I've seen that too, is the administration and Mnuchin in particular has been kind of watering down the expectations. So the key is not going to be the actual signing, but the release of the details of this. And because the administration and officials have been kind of downplaying this, I suggest probably somewhat of a disappointment. They said if there wasn't a disappointment, obviously there could be a jump in risk. We shall go on and see. Probably going to be relatively quiet until we get to that point. We can go on and catch a quick story on here. So currencies marked time before the trade deal and UK data eyed. Major currencies were closeted within tight ranges on Wednesday. Boy, they certainly have been. As investors awaited the sign of a U.S.-China trade deal with the greenback holding above a one-week low against its rivals. Though the formal agreement due in the early U.S. hours is aimed at drawing a line under the 18 months of tit-for-tat tariff hikes that have hurt global growth, it will not end the trade dispute between the world's two largest economies. I don't think the market is fully convinced about a closure on the trade conflict front, as the issue has caused a lot of damage to the world economy, said Neil Mellor. U.S. Treasury Secretary Steve Mnuchin said existing tariffs on Chinese goods would stay pending further talks. So that's huge there. Against the basket of its rivals, the dollar index was steady at 97.40, just shy of a one-week low of 97.29. The Chinese currency is the offshore market one was broadly steady. The Australian dollar, a relatively volatile barometer of trade tensions, was a shade weaker at 68.93. President Trump is slated to sign the Phase 1 trade deal agreement with Chinese Vice Premier Liu He at the White House at 16:30 GMT. Washington has already agreed to suspend tariffs on 160 billion of some Chinese-made electronics and have the existing tariffs on 100 billion of other goods to 7.5%. But it will leave in place 25% tariffs on a vast $250 billion array of Chinese industrial goods and components used by U.S. manufacturers. A source told Reuters that China has pledged to buy almost $80 billion of additional manufactured goods from the United States over the next 2 years under the deal, although some U.S. trade experts call that unrealistic. Elsewhere, the British pound was broadly steady at 30.14 after sustaining some losses in recent sessions thanks to a course of dovish comments from central bank policymakers. The only major data in the European session is UK price data due at 9:30 GMT, where inflation is expected to grow 1.5% in December. We did go over the data. We're going to touch on one other story here. As I said, it's been relatively light all the way across the board. Gold gains as investors doubt the impact of the U.S.-China Phase 1 deal. Gold rose on Wednesday as investors sought safer assets amid uncertainty about the effectiveness of a Sino-U.S. Phase 1 trade deal after top U.S. officials said tariffs on Chinese goods would stay in place. Just a day before the world's top two economies prepared to sign an interim trade deal, U.S. Treasury Secretary Steve Mnuchin said tariffs on Chinese goods will be in place until after the completion of a Phase 2 agreement. You know, folks, it took us 18 months just to get to this, whatever you want to call it. It's obviously labeled as Phase 1. So what do you think is going to be for the Phase 2, which is the more harder, and hence the administration is really downplaying it. Keeping the tariffs would reduce the economic benefits of the Phase 1 deal by limiting China's access to one of its largest trading markets. Overnight reports that the U.S. would keep existing tariffs in place of at least until after the U.S. election has obviously rattled markets that have been somewhat supportive for gold. I struggle to see gold trading above $1,500 for a sustainable period of time over the next year or so, largely as a result of this trade uncertainty. Gold rose 18% last year, mainly because of the 18-month-long tariff dispute and its impact on the global economy. Asian stocks slipped as Mnuchin's comments dented risk sentiment. The importance of the Phase 1 deal is now diminished, said Yigar Trivedi, commodities analyst at Anand Ral Shares and Stockbrokers in Mumbai. It's just symbolic at this time. I completely 100% agree. It's just symbolic at this time. It will not have any significant impact on the market. A source on Tuesday said that under the deal, China had pledged to buy almost $80 billion of additional manufactured goods for the United States over the next 2 years, though some U.S. trade experts call it an unrealistic target. Concerns of friction if U.S.-China ties are also remained with the U.S. nearing publication of a rule that would block shipments of foreign-made goods to China's Hawaii. The Federal Reserve's Beige Book, a summary of the commentary on economic conditions, was due at 1900 GMT. Let's close this off. So with that, we can go on and jump into the analysis. And just pulling out the bias chart. And once again, as I mentioned, we've been in a rather tight range, and it's just been that way since the beginning of the week. So some of these, we just simply haven't had any real significant changes, but we'll go over the analysis. Some of these numbers are going to be, as far as the bias chart, are going to be still going to remain within those ranges. So let's go and move on. The euro remains in a tight range ahead of the Phase 1 signing event. The support is steady at 1105, which is what we had before, with resistance at 1170. So we're going to pop back here. And with these tight ranges, we're just not going to see a whole lot of movement. Obviously, hence the word tight ranges. So the analysis hasn't changed much. I mean, we are where we are right now. But in the meantime, there's support right there, 1105. So the support remains at 1105, and the resistance, what we need to get above, is going to be this 1170. So as you can see, no changes. Now, I will say we're in a range. I give it the benefit of the doubt in the sense that it's still above this trend line. That being said, we had, in two of the 3 trading days, we had lost the 1170, and we've stayed below that. So I can't go on and mark this necessarily as bullish, although we can say we're above the trend line. Generally, this bias that we have is on a short-term basis, so I'm trying to give it the benefit of the doubt. We are trading within a range. Obviously, we get a daily close below 1078. That's it. It opens the door for a much lower challenge. But this will still remain the same, 1105 on the downside, 1170 on the upside for resistance. Hopefully, we get these ranges broken today. Let's go move into cable. Cable twice tested and successfully defended. Let's see, put this in here. There we go. So you can see right here, cable twice tested and successfully defended the pivot of 2980, closing above 130. Resistance will be 3082 with support at 2965. We are expecting some volatility, so we've widened the range a little bit. I mean, yesterday we had this 3050. We've moved it up. Like I said, we're kicking it up here to 3082 with support at 2965, tightening everything, but opening up that upside a little bit further in case we do get some short covering. I don't think this is playing around here with a switch on me or something, because I know that that's not right. But anyway, it's going to be 3082 and 2965. As I said, we're still hanging around here. We'll see how we play after the phase 1 deal. I think we'll start to get some real movement starting to generate, and we'll see what happens. Obviously, a daily close below 2965 is really going to open the door for us to move even lower. We're still holding above here, and as I said, we're looking for a move. Potentially we can get up here to 3082, which isn't saying a whole lot, but once again, market's rather oversold, so we can go and see a little bit further bounce on that. Well, we don't have any change here in the Aussie dollar. You can see here, it's just been sheer lack of movement over the last couple of days. So what we're looking at on the upside is 69.42. That may be, it actually is not that far away. It's just that we've been trading in such a tight range, but it comes in right here. That's going to be the key. Now, this whole deal with the phase 1 signing, we mentioned it yesterday, what potentially can happen. Now, don't forget, we've mentioned is that there's been the idea that we'll be seeing a cut from the RBA in February. Part of it has been not only the Australian bushfires, they've kind of added to that. But we've seen such a weakness in consumer spending and sentiment as well. So the door's really open for a cut. My thoughts is if they do get it, and now people are starting to really downplay for good cause, but downplaying this phase 1 deal. Another reason is because the administration themselves, as I said, are watering down expectations. My guess is the reason they're watering down the expectations is because the signing part, there's no need to water that down. I mean, they can make the best of it on that, and make a big brouhaha about how it's such a great thing, but it's the details that are going to be released. My guess is, because they're saying if the details are released at the same time as the phase one ceremony, that I doubt. My guess is the details are released shortly thereafter, in the sense is, I don't know, maybe a half hour later, maybe an hour later. And so we potentially could see the Aussie maybe trigger some stops and go above 69.42, but ultimately we may find ourselves going lower. The key would be a close if we were to close above 69.42. I don't really see that, but this is what I think they may potentially could challenge. But right now they're already downplaying this phase one deal, so I may have a hard time even trying to get up there, but we'll keep that as resistance. Support, well, we're right there at, we mentioned 68.79. We're already at 68.88. We will work this a little bit lower for today, and support is going to come in. See right here, coming across here. We'll work a little bit lower. 68, we may have to go and move that actually realistically right there. 68.59. Let's call it 68.59. Let's go and move into the Kiwi. The Kiwi is weakening, albeit slowly. Support is going to be 65.72, followed by 65.44. You can see that right here, which is the 38% of the move of 62.01 to 67.56. Resistance is going to be 66.53. And as I mentioned here, 65.72. I'm going to actually give it a little bit more. Well, actually, that is key right there, the 72. And let's go with the dollar CAD. Okay, it says the dollar CAD is in a minor steady climb, and you can see that continue just a little bit further. Each kind of held our own here on Monday. Tuesday we edged up just a bit higher. Today a little bit higher than that. So I said it's in a minor steady climb. Resistance is 31.13. We talked about that since last week. We came close to it. On Thursday, I thought we might trigger it, and then, but ultimately we did slide back as we got just above 31. So it's going to be 31.13. Followed by 31.36. Support is going to be 30.29. And this still remains bearish. Let's go moving to the Peso. Well, no changes here in the Peso. I mean, this is to say this is a tight range. Is a big understatement. You can see this. I mean, if you look at this, you would think this was maybe a 15-minute chart. Look how tight this. I mean, we are just simply not even moving. But certainly the door opens, looks open to go to 1865, which would be confluence with 1862, the 161% of this failed range. Right here, something we've gone over multiple times. No change, and 1865 is what we're looking for potentially. It seems like it's a ways away, but it looks like when we look at the support and resistance, but it feels like, especially today, we can see a little bit more extra movement. And we're looking for 1865 with an upside right here at 1888. I think today might be the day we could break them, head on down, but we shall see. With that, let's go and move into the dollar peso. I mean, not dollar, the dollar yen. Well, we did get a minor pullback, just a quick minor pullback yesterday on the whole idea about, hey, they're going to keep all these tariffs in place that quickly allowed the dollar yen to pare back a bit and kind of bounce back into where we are. So really, there's no changes here with the dollar yen. What we're looking for is a potential move up here to 1050 right here. I think on a 2-hour chart, it comes up at 1047. But Mox next, we'll call it 1050. Once again, and at this point now, as I mentioned, it looks like now people are with that. We saw that quick dip in the S&Ps, a bit of a dip here in the dollar yen with that headline that came across. Hey, they're going to keep all these tariffs in place. We're going to wait until the other portion, not till after the election. So it's kind of raining a bit on the parade. So that being said, we may have a tough time getting to that 1050. So if we look here, let's take a look here on a 2-hour. We may have to go with the 4-hour just to, yeah, I have to get the whole amount of data in the chart. Let's see if we can pull that far enough back. Oh, there we go. Right there, you see that? 1035. Let's call it. Doggone. Right there. That's 1059. And this lower area right there, it's 1035. 1035. Here's what we'll do. I think that might be a bit ambitious, so let's go with 1035. In light of where things are at right now, that's what I mean. It's certainly a good buy mode, but once again, this dollar yen, if you look at to where we're at, when you look at the equities and risk on, this dollar yen should easily be well above 114. So you can see when you take that, and you might even think, well, that's even a stretch. Okay, well then let's just say it should be at 1250. I think that's reasonable if you even said 12. Okay, in light of the huge massive run we've had in equities, you think, wow, we haven't really moved, which is true. So we may have we're going to go with 1035 on the upside right now. If we do see that, what many are looking for potentially to buy the rumor, sell the fact, support's going to be 964. That will remain steady here. We'll go and move into the cash dollar index. This is the epitome of a tight range. Look at that. Back to back. And almost really going to see back to back to back. But definitely you can see these last two back to back gravestone dojis right here. Right at resistance at 97.42. And that's what we need. But we're looking at a downtrend line. Resistance, intra-resistance we've had is 97.67. But we all know if this were to jump up here, 97.67, the real key is 89. 89 is absolutely huge for us to go full buy-on mode. Now, with that being said, that's the difference where I still have this remaining bearish. Unlike the euro, which I'm kind of giving it the benefit of the doubt, it's holding its own. The dollar index, same thing, is kind of holding its own from going higher. And you know, this would put on a full buy mode above 97.89, but we have not even been able to close uh, above this 97.42. Got a hair a bit just above that day, but as far as just above it, whether it's at least 48 or something, we have not been able to do it. So 97.42 is just hanging right there, and this market cannot get behind it. Can we push above? Potentially so. I really don't see a move to 97.89. So, but that's what it would take to go full buy on mode. So we're going to go with 97.67 and support 97.13. That's not that far away. If we do break lower, we're looking at 96.80. With that, we'll go on and move into the cross rates. And, you know, with this whole expected phase one deal, you can see everything is wound up like a corkscrew as far as the lack of volatility. And we're just sitting there and it's just almost waiting to bust. Today's going to be interesting. That's what I'm saying. I think, you know, once, obviously that's, it seems like an understatement, but I'm saying is, you know, it's going to be, not to overuse the word, but it's going to be interesting to see what the market's initial reaction is once we get the phase one deal signed. Obviously, the key is going to be the details. And I'm thinking we may see, you know, the market, you know, come off, rally back just a bit, and then really start to push its way. Whether we push away with force, my guess is even with the S&Ps, we might just start to see this thing drip and drip lower, meaning we come off, we rally back, and then the market just kind of a little bit lower, a little bit lower, a little bit, maybe it rolls into tomorrow, a little bit lower, and then maybe we hit a little bit of a dam on Friday. We shall see. And then maybe further fall through next week. Don't want to get ahead of ourselves because we're not here to predict markets, but like I said, we have tightened up here in quite the corkscrew fashion, in a sense, when you see this market tighten up and it's just waiting for an event. The event obviously is a phase one deal. On the upside, we're looking at 73.05 as resistance. No changes there. Downside, 72.52. We may need to give that just a bit more room here. Let's go and look at a 2-on. Right there. Let's pull it just a bit lower. You see this coming across right there? Right there. 72.28. So if we do make it down there, I'd be looking for the market to catch a little bit of short covering. But I think that ultimately we'd see that market come back, and then we may have a hard time just even trying to get past 56, and then we start to roll back. If we once again start to see this whole, you know, get a little bit of risk off. I don't think it's going to come in a big fell swoop, but it could start to break. We hit some stops, get people short, the market rebounds. We kind of hang around there. Maybe some people get a little bit nervous. They may cover, and then over the next few days into next week, I think we'd start to drip back down. We shall see. Let's go move into the Euro Yen. That's my take on that. Let's go and move on to the daily chart. Well, looking at what we had from yesterday, we were looking at 22.64. I like that area here. If we do get that jump, well, no, I was thinking about that 23.04, the 61%. We did get to the 22.64, but I like this market moving above the 22.64 potentially. So we're going to go this one is a bit tougher here. Tell you what, we're going to go right there, right there. You see that? 22.92, 22.92. And once again, just trying to allow for some additional volatility. We had 2169 here. We're seeing the cable. Let's get to that real quickly. Quick dip here in cable. Let's see it right there. Look at that breaking cable. We're 2987. CPI, core CPI, actually came in 0.2 month over month. PPI month over month came in 0.1. So definitely surprised. So that will yank this down here. Let's go in a little bit of support there, 29.89. If you see right there, come across. We did dip down here as low as what, about 29.94. But our bias chart for today has support at 29.65. Let's now go and move back into the cross rates to the euro yen. And we're going to keep this here at 21.69. Let's go move into the euro odd. Same thing here. We mentioned this yesterday. It's kind of, I don't say a mixed bag, but we talked about this. We've had a little bit of movement here, so you can't gripe about that. We saw this bounce, so we saw a pretty decent drop, a little bit of covering, short covering, a decent amount of short covering when you look how sickly most of these ranges have been when you look across other rates. So it's actually been pretty good here as far as movement, but you can see here we've quieted down quite a bit. Resistance here is going to be right there, 62. I guess we'll just go with the technical level, which is going to be 62.50. Figure the odd will continue the weekend with support at 60.92. We'll keep that one there for right now. But I can see this certainly breaking as we go further out. So, but that'll be an area where you would look where the stops would be, just below 60.92. Let's go and move into the euro Kiwi. Well, we'll continue to strengthen a bit here with the euro Kiwi. We had some resistance at 68.60. Well, we are pressing here. I am looking for the euro to strengthen a bit here. Right there. Let's call that 68.94. 68.94. With support I think we have to move that a bit higher. Let's go and take a look here on the 2-hour chart. Right there. Right there. 67.87. 67.87. And with that, let's go move into the ASEAN. Well, yes, there was a fairly tight range here, and you could almost call this a bit of almost a spinning top, but I don't think you can provide too much credence on the action that we've seen over the last couple of days because of the lack of volatility, because everybody's waiting for the phase one deal. That being said, resistance is going to be right here at the 76.19 because I'm not expecting a whole lot, and especially with the Aussie, with what it's looking at, potentially we can just drag ourselves right back down here again. And I'm talking about the potential for a rate cut. And downside 75.20. We'll go to 75.20 for today, but I think we're going to break lower going forward. Let's go and look at the guppy. Look at this. I mean, completely dead in the water here. So no change. Looking at 43.10. Downside 42.23. No change whatsoever. Let's go into the sterling odd. Well, you can see the key level right there. If we're able to get punch this a little bit higher, which is going to be 89.30. Certainly gaining, essentially the odd losing. More about that than sterling strength. Although we are holding above this trend line. But as I mentioned, I would looking out. We get past phase one, and we're looking ahead, and not that far ahead into a potential RBA rate cut early February. You can certainly see where we should go and be keeping the bid here. So it's going to be 89.30 on the downside. 87.87. Obviously, equities are the big thing for today. Not they haven't been, but now it's just a matter of can they bolt these things for new highs? Will anyone stand in the way? You know what I mean? But you have to be careful with that because the market may just step back and see what they can let them goose. So don't be surprised. I mean, I think we're going lower, but we might get a little bit silly. And no one's going to stand in the way, I would think. No one's going to say, you know what, I'm going to play Matador and stand in the way. They just may let this thing just goose up. You see what I'm saying? And then we may start to see this thing come back in. So don't be surprised. I think it was Blake. Well, I know, but I'm saying is he had he's got to come way back. He had 33.10 is 161%, and I'm trying to remember where he was pulling that off of. I'd have to edit this back, but 161% being 33.10. So don't be surprised this thing gets a little bit silly. It could. I think people will wait till afterwards, but once again, It's going to be the details of that agreement, which have already been downplayed to a certain extent, and why this market may have a tough time trying to get up even to the highs, because folks are going to be trying to jump in on this thing to get short, I would think, overall. But the thing is in the meantime, people might just step away and let the thing gun the stops. But I do expect us to go and begin to slide. I don't know if it'll, to me, I think it may be when we do go on a pair back. I don't think there's going to be no avalanche selling or anything like that. I believe we'll hit the first spate of stops lower, and then we'll start to come back. And then over the next course, the next few days and into next week, I believe we would see the market work lower. Looking at gold, so we saw a bounce back here up to 1553. If we do start to go and see that slide going forward, I think we'll have a nice undertone bid for gold. So support coming in right there at 1546 short term. And then we can probably start to work hard with the first key resistance coming in right there, which is going to be 1563, about $10 higher. And definitely wouldn't want to stand in the way. Beyond that, we're going to nice full buy on mode if we get a 2-hour close above 1578. Crude oil continues to stay weak. We're still right here. Actually, let's see here. Boy, we have just stayed here, and we have just been quiet as a church mouse. Just a hair under $58. That's all we do have, though, for the European crossover webinar. Good luck. Let's keep the powder dry and get ready for potentially some good movement going forward here, whether it be in the yen, the euro, cable here. I'm talking about on the majors. But once again, thanks for joining us here on the European crossover webinar. And we'll see you in the chat room.